So you've been reading about Roth conversions and you're thinking about doing one yourself. But one of the biggest mistakes that people make is not converting enough of their IRA to the tax-free Roth. I'm going to show you what doing a $100,000 Roth conversion will cost if you're married and if you're single. First things first, not everyone should do Roth conversions. They are not in the best interest of every single person. One of the things that you have to take into consideration is the taxes that you pay today. Those are taxes that you no longer have. You've given them to the IRS to move money to that tax-free Roth IRA, and that's money that you won't earn interest on over many, many years. Now, that is not the only reason that you should look at for considering if a Roth IRA is in your interest or not, because future account balances, that's one aspect, but there are other considerations that you should look at. So one of them is just simply every dollar you move into a Roth IRA, there are no required distributions. So between the ages of 73 and the rest of your life, you're not going to be forced to take money out. You're not going to be forced to stack that income on top of your other income, possibly in a time or an era where income tax rates are higher. Or when one spouse predeceases the other, when you go from married to single, all of that forced income won't be compressed into these much smaller brackets. So a lot of things to kind of think about there. This video is to simply show you what the cost is to do a $100,000 Roth conversion. Okay, why did I pick $100,000? Well, as I said initially, one of the big mistakes that people make, if this makes sense to go down this path for you, is doing too small of an amount. Let's say you have $1 million in your retirement account and you say, I'm gonna do $25,000. Well, you're moving a small amount relative to the overall portfolio balance, and let's say you go 10% up. Now you're at 1.1 million. This 25,000 has grown to maybe 27,000. But the IRA has just gotten bigger and bigger and bigger, and you're really just, dumping a little bit of salt into the ocean. You're not making a big enough impact to really significantly improve your tax situation in the future. So that's why we picked 100,000 is to help you understand what that would cost. Now, you also have to understand that everyone's going to have a different level of Social Security, some maybe rental income, different amount of dividends and long-term capital gains, and when you buy or sell stocks. I'm just trying to isolate as many of the variables as possible and show you simply what it costs to help you understand some of these concepts. So here, first we're going to start with a single person that has $40,000 of Social Security, total Social Security, and $12,000 of dividends, 10,000 of which of those are what we call qualified dividends. Now, I'm showing you this with no Roth conversion first so we can create a baseline. I'm going to do this also for the married filing jointly couple. Here's the number I want you to see. Total tax, $0. So this couple is over the age of 65. This individual is over the age of 65, so they have a $6,000 enhanced senior deduction. There's another bonus deduction, smaller one for being over the age of 65. If you're under the age of 65, this is still going to be a zero tax. So $40,000 of Social Security, $12,000 of dividends, 0% tax, $0 in tax. Okay, so here's the $100,000 Roth conversion and what the cost is. So single person here, everything's the same. We still have the taxable Social Security, we still have the dividends. And one thing to point out here is the enhanced senior deduction. That has been phased out. So it went from $6,000 to $1,740. That's just simply because the conversion has created income that has pushed you past the threshold to where that phase out begins. So that effectively just reduces that standard deduction or that senior deduction. So here's the bottom line number, $21,964. So let's call it $22,000. So the effective tax rate for someone with this Social Security and single over the age of 65 is about 22%, 21.9%. So the question becomes, is that the right thing for you to do? Well, it has to be modeled. You have to look at all these different scenarios. One to be aware of is that that's $21,900 that you don't have in your accounts compounding and earning interest for the rest of your life. But on the other hand, once required distributions start, you're going to have to take this money out anyways and pay tax at some unknown rate in the future, depending how old you are today. So it's balancing how much risk do you want to carry as far as the unknown tax rates in the future, how much you're going to have to distribute, how much your accounts will grow, how much do you want to leave behind, tax-free, taxable, versus the account balance today earning interest by not paying those taxes and allowing that to compound. So a lot of decisions here. You just simply have to kind of model this out and make the decision, again, considering the trade-offs of both. But what I always say is you want to re-anchor back to what's most important to you. So if passing on a tax-free legacy is most important to you, well, that may outweigh that the account balance may not be as high with the Roth conversion, but it's going to be tax-free. So even though it's lower, it's all tax-free. And if that's what's most important to you, that may move the needle in the favor of doing the conversion. So there's any number of these scenarios, and this is really what planning is about. It's about having these conversations, running the analysis, modeling it out, and then this changes oftentimes every year. What's important to you, the tax code, all of these things change. I guess right now I just want you to understand if you do this conversion with this level of income, it's about $22,000. Okay, so now if you're married filing jointly, here's the baseline scenario. So same, $12,000 of dividends, $60,000. So we have two Social Security checks here, $12,000 enhanced senior deduction, total tax, again, zero. So now what I'm doing here is we did a video recently called the Tax Torpedo, where we looked at how taking one more dollar of income, even though if you're in the 12% bracket, often can be taxed at 20, 25, 30% if you're married, and up to 50% if you're single. So the Tax Torpedo video, I'm piggybacking all of these dividend and Social Security numbers off of that, but that's an important baseline concept to understand when it comes to deciding whether you want to do a Roth conversion. So at the end of this video, we'll put a link up top for you to go watch that if you'd like. So baseline scenario here, again, our standard deduction is twice as much when we're married than if you're single. Same with enhanced senior deduction and same with the income tax brackets. But here's the baseline. Now, here's the $100,000, how much tax would be owed given these considerations. So we'll just jump right to it, $14,477. So we can see here on the enhanced senior deduction, we get a slight phase out, not nearly as much as the single filer, because you can have twice the amount of income if you're married before the enhanced senior deduction starts to phase out. So it has brought Social Security into a state of taxation. We go into that in the Tax Torpedo video to help you understand that a bit better. But bottom line, costs you about 14.47%. So to do a $100,000 conversion, it's gonna cost you about 14%. Same trade-offs, right? We have to understand that that's not money or money we won't have in the retirement account to compound over time, but we don't know what tax rates will be in the future. But more importantly, you have to make these decisions weighing the trade-offs relative to the decision itself, but then anchor back to what's most important to you. What are you trying to accomplish? So I created a Roth conversion guide to essentially guide you through the process of making the decision of whether a Roth conversion is right for you, to help you understand the things that you need to know before you make that decision. So to get the guide, we put a link in the description. Just go click on that link. It'll take you to the guide. And if you're considering doing a Roth or you've been doing them, this will really enlighten you and help you look at Roth conversions from, I could say, a holistic point of view, not just how much money am I going to have in the future, or I don't want to pay taxes in the future. So it's a really good read. I encourage you to go get it. And I told you that we would put up the video at the end of this one that talks about the Tax Torpedo. So click this one right here, and this will give you a deeper understanding of how income is taxed when you make these distributions. Go check out that video.